Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature. None of which relied upon is any form of personal advice. Go Market Securities does not know your personal scenario, nor your personal financial goals, and therefore none of which relied upon is any form of personal advice at all. It is just general in nature only. Rounding out bank earnings season, and we need to do it. We saw Macquarie and also Westpac report at the back end. And it is a tale of two difference. I mean, admittedly, Macquarie is a different beast, being the big investment bank that it is, but it shows how impressive you can be with correct diversification, incredibly good management, and also making sure that you are getting into markets that you know you can be the best at. And that's what Macquarie continues to show. It's not a new thing. I need to point that out. It's not a new thing under Macquarie, and their numbers show you why they're so impressive. Yes, you saw the stock decline, and that is because there is some uncertainty about going forward. Part of the reason they've done quite well is that if you do look at particularly their trading desk business, which is their commodities and fixed interest and fixed currencies business, that will be volatile, and some people are suggesting that it will probably fall away. But overall, the core business of Macquarie is rock solid. Then you go to Westpac. Westpac, as expected, is coming from a very low base, and a $3.1 billion cash earnings actually is okay considering all of the mess that it's got itself into. And it's slowly maybe showing signs of turning around. There's a long way to go. They're going to have to shrink themselves to greatness, and that's what they're trying to do. And it's all about a cost out story. And therefore, let's take the whole earnings season together. If we look at the banks that we've seen report in this earnings season and then throw CBA back in from way at the start of the year, there is clearly signs that there is a two-speed, ANZ, Westpac versus CBA and NAB, and that's probably likely to continue to play out in the short term. They're getting back to their best, don't get me wrong, they are getting there. The other thing is the net interest margin expansion will likely come in terms of the interest rate rises are moving that way. What it means also is that if that's the case, competition can actually be improved again, because banks will have that little bit of margin to move their consumer clients around. They'll have that ability to move you into an area that maybe you hadn't ever expected. Does that mean chasing fixed loans, variable loans, business lending, corporate lending? All those kinds of things you can start seeing will happen in an expanding period. And the banks therefore may actually be a little bit of a buffer against the volatility that we're currently seeing in global and more expanded markets, because their day-to-day transactions will probably maintain, their business will expand naturally by having better margins, but also their competition and their razor-thin ability to move gets a little bit improved. Overall, bank earnings season was a pass in my opinion. There's certainly some good aspects, but also not some great aspects. And we're still coming out of the COVID crisis. There's no doubt that reasons it looks so good on paper is that they're rolling off the issues that they were experiencing in 2020 and the start of 2021. And until that's clear, we probably won't have a full and deep understanding about how the banking community is going in the current market and the post-COVID world.